Hopefully you can see my screen. Good afternoon, everyone. Good evening, good morning, wherever you are in the world. Good to have you here. Just move the chat box out of the way. You would think we'd actually rehearse this, but I can assure you we haven't. This is my Renko workspace. As Anna said, it works slightly differently, but it's a really nice example at the moment because we've got this reversal going on, and it just demonstrates the power of not only using multiple timeframes from a time-based perspective, because down the bottom here we've got the 15-second, the 30-second, and the 1-minute chart. So we've got time-based chart down here. So we can apply VPA quite happily along this line, this level, if you like. You've also got the indicators there attached to the chart as you would expect. You've got the volume point of control, you've got accumulation distribution for price-based levels, and you've obviously got the trend monitor there as well. Up at the top here, I've got the equivalent Renko charts aligned to those time frames. So this is aligned to 15-second, this one is aligned to 30-second, and this one is aligned to 1 minute. Now, Anna was on a fixed Renko box size. I've got this running on the optimal box size. So I don't want to flip around too much because we're running on a mobile broadband network here at the moment because our fixed is down. But just to show you how easy it is, this is on, so I'm going to select the 15-second here to tie up with my 15-second below. We'll just see what this comes up at. Just wait for that to settle. Okay, the previous was on 9. I'm just going to click that. That will now open. So we're now running on 8. And as we're on the YM, that equates to 8 points. So in other words, on a $5 contract on the small Dow, that's going to be $40 a brick. So each of these bricks is worth $40. So you can get an idea of this. It'll run up here. You know, this is money worth having, I can assure you. Do the same exercise, doing it very delicately, I can assure you, hand in mouth at the moment. Let's change this over to 30 seconds. So we'll just click on that to see what that comes up at. Okay, that's come up at 12 now. So we'll just click that. That will then open basically the 12-point Renko. And then if we go to our slowest time frame, which is 1 minute, which is this one, that will then open up for our final Renko there, which is 17. So each of these bricks here is worth 17. And what the Renko optimizer in NinjaTrader is doing, it is basically delivering for you the optimal brick size. There's no guesswork involved. It's exactly the same as the tick speedometer does for tick charts. If you're trading on tick charts, I'll hop over onto that during this session. But when you're trading non-time-based charts, it's very difficult to know what to set them to. You can certainly set them to your preferred. You might say, well, you know, 8 points is too much for me, $40. I want to set it to 4, I want to set it to 3. You can do that. But what this is saying is for this particular moment in the trading session, we are trading at the optimal brick size for this particular trend, which is driving nicely higher. And the other facet, of course, of using multiple timeframes is you then get all the advantages of using the indicators as well in the same way. And what you'll see here, obviously, is this trend monitor will transition first on the fastest chart you've got, which is our 8 Renko here, our 15-second equivalent. It's also transitioned over here on our 12, on the 30-second, and it's starting to appear now over on our 17. Now, if you're holding this trend, this is what you want to see. You want to see this trend moving through, both in terms of the trend dots are very close to the price action. You can see here they start to change color because they work very close to the price action, the same sort of principle here. When they're below, they're pushing up, then they roll over onto the top, they start to change color, then they come out the other side, they move back to the bottom, and now they're starting to push the bricks up again. So they're supportive of this bullish reversal in trend. Exactly the same here, not so demonstrable. They've just flattened here, but then move through the brick and then back down to the underside, pushing up. Over on the 17 brick time frame on 1 minute, they haven't moved at all. They're still continuing higher. But what you see in terms of the trend monitor, when you look at it in relation to the trend dots, is the trend dots, yes, they reverse because they're very close, but then they pull back again and go back into bullish momentum. As far as the trend monitor is concerned, absolutely nothing. There's nothing at all, not a flicker of a change there. And that gives you so much confidence to hold that position. I cannot tell you, it is the one aspect of trading, I've said it many times before, it is the one aspect of trading which is the most difficult to master. Because if you can't hold this particular trend, maybe, let's say, for example, you got in maybe a little bit late here and then you got flicked out in this one, and now you're sitting there thinking, well, I've missed all of this, and now it's pulled back again. Now we're carrying on up again, you know, and I've lost all of this because I got thrown out early. Excuse me. This is the hardest part of trading, is staying in the trend to maximize what this trend is going to deliver for you. Because you will take small losses, we all do. We keep them small, and generally you will have far more small losses than you will have big winners. Hold on for a moment. Sorry, I just had a frog in my throat. And that's the reason you need to find mechanisms and methodologies to help to keep you in the trend, to maximize what that trend is going to deliver for you, and then to get out, not too early, but to get out with as much profit as you possibly can. Because then the maths of trading works for you. You are then in an environment where you've got some bigger winners. You can work on 7 losses to 3 winners. You can even work on 8 losses to 2 winners on a 10 trade time frame. You know, as long as those 2 or 3 winners are relatively large and the 6 or 7 losses are relatively small, that's how trading works. You don't have to work on a 50% win rate or a 60% win rate even. You know, you can work on a very low win rate, 30 or 40%, as long as you're making those big winners. And this is just a nice example. You know, we're staying in here, we're sitting in it. And obviously what you're doing also in this particular trend development is you're looking at other aspects of risk. You're looking at related markets. You'd be looking at bond prices and bond yields. You'd be looking at currencies. I mean, I can tell you straight away what's going on in terms of risk on, because this is the Japanese yen. It's selling off. We had a little bit of a rally here, which probably reflected this little bit of a pause point here. This is on 3 minute. I'm not going to change time frames because I don't want to push too much data through the system. But basically, that is what the yen is doing. So it was overbought up here. It's now starting to sell off. So we are starting to see, and that's the reason we're starting, one of the reasons at any rate, we are seeing this rally, because we are seeing outflows from currencies, certainly from the yen at any rate. The yen has been sold into a risk-on environment. And that was also reflected when Anna was talking here. We had the buying of the Aussie, which is a risk currency. In the same principle, we had buying of the New Zealand dollar here, the grey one, and we had buying of the Canadian as well. So the whole framework at this point is giving you a sense of this aspect of whether the market is in risk on or risk off, because when you boil it down to the bare essentials of what you're trying to do, that's it. It's a seesaw which moves constantly in all the time frames. It's purely money flow going from safe haven into risk assets and back again. And that's it. At its simplest level, there's nothing else to trading, because money flow is what drives the markets. It's risk on, risk off the whole time. Now, obviously, in addition to that, I'm looking at the VIX. I've got that over on the right-hand side. It's currently trading lower. It's come off a bit. It's down at 23.26 at the moment. I won't pull that one over because I've got that quite limited at the moment. So this is giving you just a really nice example, really smooth example. And the beauty of Renko is that, as Anna said, you get these beautifully smooth transitional phases of price action. Now, in addition to what I've got on here, you've got the trend monitor down here. We have this transition. You can see here with the little fluctuations in the downtrend, we had a little rally. Then we start to move into this phase here. Now, at this point here, the trend monitor starts to say to you, do you know what? I think this is actually a transition in trend. All these others I've ignored because they're not important, but this one is. We go into darker red, then we go into darker blue as it gains strength, and finally we come out the other side into bright blue. And that's how the trend monitor works so well. It's just brilliant. Now, in addition to that, on the chart, I've also got the accumulation distribution indicator to give us some idea of where the market is going to hit some strength, or it's going to struggle, in other words. And the beauty of the accumulation distribution indicator is that it paints these levels graphically. It gives you a visual sense of strength or weakness, because this one, you might be able to see, it's got a little 1 by it. That means that's been tested once. In other words, it's not very strong, so the line is very thin. This level down here, on the other hand, is extremely strong. Why? Firstly, because it visually tells you that, and secondly, because the little number here, which you might be able to see, is 8, so it's been tested 8 times and held in the past. So this is a strong level. You've got minor levels here, you've got stronger levels here. This one is a little 3, but what's important about this level is we've got a little cluster. So we've got 2 clusters of relatively strong levels, which are then going to come into play as the market gets up to this region. So you then start to bring in the other elements of support and resistance, which play a key part in the whole business of the technical analysis and of VPA itself. Coming up to a little bit of a pause point. Then, of course, what you've got below here is you've then got the advantage of overlaying your non-time-based approach, whether it's with the Renko as we've seen there, or whether it's using tick charts. You can then apply volume price analysis down here in tandem with the advantages of trading a non-time-based chart. So you can see the little injection of volume we've had here, nice widespread up candle, decent volume under that particular candle, a little wick to the upper body, but nothing too serious to worry about. We had a similar sort of breakout, if you will, or some injection of momentum into the move. We're starting to get some weakness coming in here, though. We're starting to, what you don't want to see in an up move, you really don't want to see this sort of price action. You've got a wick to the upper body here. You've got decent volume under those two, so it's starting to look a little bit weak, this rally. In addition to that, you're running into some potential resistance, as denoted with this red dashed line here of the accumulation distribution. You can see it's being tested. The more that's tested, the stronger it gets. It's like Popeye and the spinach analogy. You know, the more spinach he eats, the more muscle, the bigger his muscles grow. And it's exactly the same here. The more these levels have tested, then the stronger they become. This one was 5. We broke through that. So that at that point, that was a strong resistance area. That's now become a potential support area. So we want to see this tested. We want to see a breach of that level. We want to see it push through that on decent volume. It's struggling at the moment, and you can see at the top here, we've got another level up here. This is relatively strong too, this blue level line as well. So we want to see the market push through here, push through 608 up to 6010, and then from 610 up to 630. The important thing there is we're really then looking at the resistance, which is likely to come into play from a volume perspective, because we've got the volume here, which is pretty heavy at this level, and it starts to fall away pretty rapidly. So if the market is going to move up through here, it's going to move up through here. It needs less effort, less volume, if you will, because this volume starts to fall away dramatically as we get up to 640, which is going to help that particular market move higher through that region. Just see what's going on in terms of the yen. We're starting to see the Aussie pick up again. You can see it's starting to rally a bit, and also the yen here is starting to fall away again. Just keep an eye on what's going on in terms of the VIX over on the right-hand side. Let's have a quick look. That's down at 2240, so you know that's okay. And we're still ticking up at the moment. Let's go and have a quick look at the where are we? There we are. What's that? Let's go and have a quick look at the 3 of the indices. When you're trading one of the indices, and you know I've said it so many times before about trading on Globex, I've said many times before, trading on Globex is fantastic. You get much smoother price action, you don't get so much volatility, and you don't get so much choppiness. I've been castigated for that over the years, and now, funnily enough, everyone's coming around to the idea of, oh, actually, you know what, trading on Globex isn't too bad at all. In fact, it's quite good. Hey ho, but there we are. We've been doing this for 20 years, so I guess what goes around comes around. When we look at the 3 indices, these are on 5-minute at the top here, ES, NQ, and YM. Down at the bottom, we've got the YM, the NQ, and the ES on the daily charts. So it gives us perspective. What we're seeing right now in terms of that rally for the YM gives us a clue on the Renko as to whether we expect to see this move further, because we've now arrived at the volume point of control on 5. So, you know, the expectation is at the very least expect some congestion there, because you know you're at an important level. You're at a big area of volume here. You've got some very stiff volume here to get through. If this market is going to continue high, you can see the trend monitor here is saying, yeah, that's fine, we're okay at the moment. But expect to see the market congest. And this is what it's all about. It's bringing all these components together. You've got some strong resistance in here, up above at 620, so 20 points above. You've got more here. You've got various levels up and down, not huge. The importance from the volume is that as it drains away through here, any move up here through it should be pretty rapid. But that's going to take a decent amount of effort. But the key point from a trading perspective, intraday, certainly scalping at any rate, is expect the market to congest at this level. Pretty similar on the NQ. NQ is trying to break away from the volume point of control here. And we've also got the volume point of control here over on the ES, so pretty much the same there. But you can see the transition again of the trend monitor, which has gone from bearish into a transitional color out the other side. Same here, into a transitional color out the other side. This one's done the same. Here we didn't go into dark red, we instead went into darker blue, and we've come out into brighter blue on the other side. Longer term, the market is bullish. There are major reasons for that. But from an intraday perspective, it's literally just trading what you see on the screen and trade accordingly. Let's just head over and see what's happening in the other markets. Let's have a quick look on the currency futures up here. This is the, what have we got time frame here? I've got 15-minute up here, so it gives a nice perspective actually. So this is the 15-minute CSI, strong dollar buying we've got at the moment, or decent dollar buying. We have seen that for a little while. There we go. That's from 12 o'clock our time. So we've got decent dollar buying here. This is the Japanese yen starting to roll over on 15. So if that continues, that would be very nice for our bullish trade. You can see the buying of risk currencies here that's come in. In fact, the strongest is on the New Zealand. This is the Canadian, this is the Aussie. They don't always follow one another around, but generally, because they are risk assets or risk defined as risk assets, then you will tend to see them following one another around, as you're seeing here on the CSI. So that again is a positive aspect. You want to see the Aussie climbing with this sort of momentum, but certainly the yen is starting to fall away nicely on 15 minutes. So you're starting to see that ripple through effect of a change in sentiment, and now we're starting to see risk on sentiment take hold with the markets rallying further, which is nice if you're in that trend on the Renko. This is the Aussie dollar. This is the this is cable. This is 6B. This is 6C. This is CAD dollar, not dollar CAD, because everything on futures is inverted. So everything is quoted against the dollar. Down at the bottom here, we've got euro dollar. This is yen dollar, not dollar yen. So it's inverted again. So this is yen dollar, and this is New Zealand dollar. So you're basically seeing dollar as the counter currency. So all of these, if there is strong dollar buying across the market, all of these should be traveling in pretty much the same direction. It's a little bit lackluster, partly because you've obviously got currencies like this. You've got the dollar rising with the CAD, New Zealand and the Aussie. So in those commodity currency pairs, you're not going to see much, which is what you're seeing. It's in congestion. Why? Because they're traveling in the same direction here. We've got buying of the dollar, buying of the CAD, buying New Zealand and buying Aussie. So all of these are going to be pretty much moving sideways, which is these four. Sorry, yes, those three. In terms of euro, what have we got? Yeah, we had a bit of momentum in the euro. In terms of Japanese yen, yes, there is some movement in the Japanese yen now, starting to see that reflected in the fact we've got yen falling, dollar rising. And over on the pound, really not much to report. It's flip-flopping around sideways, and really the only thing that's going to move that is a bit of dollar momentum, but it's not moving very much at the moment, hence the reason why. Yeah. Okay, right, I'm going to have to run. We've run a little bit over time, so I hope you've enjoyed this particular session. Let me just wrap up with a quick whiz round of where we're going in terms of where you can find everything. First of all, you'll find all of the analysis, Anna's analysis, also all the books up on Amazon in Kindle or in paperback version. This is where you'll find everything, also all the links to all the other sites as well. This is the Forex education program, which you'll find at quantumtradingeducation.com. We have literally launched in the last week a very, very exciting opportunity for all our students on the Complete Forex Trading Program, which is the funded Forex. It basically means there is a complete upgrade path from education into trading our money. It is a funded account. It starts at $5,000 and goes all the way through to $2 million. So as a student on that program, it's an opportunity that is like none other. It's taken us a long time to put it together, but we're very proud of the fact that it is there now. If you are a student and you're on the program, you will find all the details on the inside, and you'll also find the buy buttons there as well. If you're not a student on the program, I'm afraid you can read about it down here. You can find a lot of the details there, but you will need to be on our Complete Forex Trading Program to get into the funded program, which, as I say, is a risk. There's no risk to you. You are trading our money, not your own, so you get to keep your trading capital, and you trade ours. It's just a fantastic scheme, and we're doing a webinar on that on Thursday. If you don't have that link, please just drop me an email. It's david@quantumtrading.com, and I'll be happy to send that over to you, and you'll be more than welcome to join us on that one. So that's this Thursday at, I think it's 2 o'clock UK time, but please don't quote me. The details will be on the webinar. Finally, just to give you a heads up as to where to find the indicators, that's at quantumtrading.com, MT45, NinjaTrader 7.8, and TradingView. TradeStation is coming. It's going to be up in a couple of weeks. It'll be TradeStation 9.5, which is the interactive broker's relationship with TradeStation, so you can trade straight through the account into a deep discount brokerage. And secondly, the TradeStation securities option, which is version 10 and above. It's very exciting radar screen. As Anna said, we're going to be really focusing on stocks on TradeStation securities, heavily on stocks, probably exclusively on stocks on that particular platform. But we will be obviously highlighting the 9.5 with the Forex indicators as well, probably in the London session, not quite decided. There will be separate sessions for both. So that's it. Really appreciate it. Hope you've enjoyed today, and we will see you again soon. We are back, as I say, there is the webinar on Thursday, but we will be back next Tuesday, 7:45 UK time for the London session, and 3 o'clock this time for the US session. So thanks very much indeed for coming along. See you soon, and bye for now.